All righty, here we are, Silver Doctors, live on air Wednesday, the 23rd day of the month of October. My name is Mike, the co-host, along with my other half over here, Mr. Paul Half Dollar. Paul, how you doing, my friend?
Doing good today. How you doing today? It's nice hump day. It's getting a little cool. You can definitely tell it's fall now.
Oh my
So,
goodness, yeah, it is. I'm starting to feel it, man, and yeah, so that's
hmm
signs that winter is around the corner or here or whatever it might be. So,
hmm
everybody, welcome to the live stream. I appreciate everybody taking time to join us this afternoon, and definitely looking forward to having some good back and forth. And we should be good to go. Let me check and make sure everything is operating correctly. For those that are tuning in thus far, give us a thumbs up if the audio is good and the quality of the video stream is good, so we can know, so we'll know that it's we're on good course.
hmm
All right, so what else we got here? Let's check into the chat real quick. Acknowledge a couple people's presence.
Yep.
We got One Courageous. We got David. We got Low Blood Pressure. We got Silver Snob. We got Alpine Maximus. Armed Resistance. Who else is over here? Dave, Great Lakes Warrior. Okay, so a couple people tuning in thus far. Welcome to the stream. So
hmm
let's get things started. So, Mr. Half Dollar, where do you want to take us this afternoon?
Um, well, there's a lot to talk about today, just about money in general and banking and finance and all of this good stuff, currency and just the basic concepts with everything that's going on. It's interesting because, big everything everybody's talking today kind of about like Zuckerberg, and they're also
Mm-hmm.
still talking about the Fed repo market
Mm-hmm.
operations. So let's talk about those a little bit.
All right.
And what it's leading me to think, Mike, is that I think we're close to some sort of event coming for the dollar. And I say that because, I think back to 1933
Mm-hmm.
when Roosevelt put out the executive order confiscating the people's gold.
Mm-hmm.
And that was like May 1st, I think it was, or maybe it was April 1st, or it was like 1 month they had, right? But then in January of 1934, not even a year later, just several months later, that's when they came out with the Gold Reserve Act of 1934.
Mm-hmm.
And the Gold Reserve Act of 1934 revalued gold from $20.67, which you would have got if you would have turned in those gold eagles,
Mm-hmm.
to $35. It's actually like 34.45 or something like that, but people just say $35. So that's a massive hit, right? That's like saying, whatever you bought in Walmart last week, if it all cost $20, everything that you bought each cost $20 a piece.
Mm-hmm.
Well, now it's going to cost $35 a piece. That's a big deal, right? That's huge.
Yeah.
My point with that is, that's not something that just all of a sudden they were like, why don't we just revalue gold to $35 an ounce? That'll solve the problem right there. They didn't just come up with that. These things are in the works. They're in the works. So here's how I want to tie it into the repo market, right?
Mm-hmm.
Everybody's focused on like, what are they doing? Is this QE? Is this an emergency? What's going on?
Mm-hmm.
And, how does anybody even really know, right? Think about what the Fed is, right? The Fed is an unelected, right?
Mm-hmm.
They're accountable to the banks. It's a private institution. They claim they're independent, but they're in bed with the government. They have a .gov website URL,
Mm-hmm.
right?
Yeah.
So, it's like the Fed is not your friend. The Fed is not on your side. So they're not going to tell us what they're doing. And if they tell us anything, it's just going to be teeny, tiny superficial.
Right.
Here's why I'm tying it back into that. Because yesterday, Keith got me thinking about this when I was talking to Keith Weiner yesterday. Because he said that, theoretically, what is happening in the repo market is impossible. It's an impossibility because it's not just like, because we're talking about it being like a pawn shop, right?
Yeah.
But it's not like a pawn shop at all. I mean, it kind of is like a pawn shop, but here's the thing. It's a repurchase agreement, right? So it's like you're going in there and you're pawning something, but you're repurchasing it back. So this is free money, zero risk for the lender, right? Because what the lender is doing is they're buying a T-bill, right? And then the very next day, they're going to sell it back and they're going to get the same face value for that T-bill as well as a little bit of interest on it. It is free money. We're talking about financial institutions. We're talking about the banks. Does it make sense at all that a bank would pass up free money?
No, it makes no sense whatsoever that they wouldn't do such a thing. That's why they're in business, is to always earn and grow.
Yes, every business is, right? I mean, that's the whole goal of business in general, is to make money, and definitely with a bank. And if you're talking about, financialization, which they love, and these accounting gimmicks to have paper profits, yeah. So what this is signaling is there is something seriously wrong behind the scenes, and we're not getting anything about it. And here's the way that I kind of put it into context in my midweek update today. Think about like a rabies outbreak, right? What if there was like you lived in a small town and there was a rabies outbreak in the town?
Yeah.
And, you keep hearing mumblings that there's this rabies outbreak, and you see this like skunk on the side of the road, and it's foaming at the mouth, and it's like doing this weird shake. And, wouldn't you like to know, what animals are infected? How many have they recovered? How many have died? How many do they think are they infected? Have any humans been infected? All of this stuff would be important to know, right?
Yeah.
But what are we getting? We're getting absolutely none of it, right? So my question is, instead of focusing on all the stuff that had happened, which the Fed is only going to let on just a little bit to us anyway, I think that, preparing for what is probably likely to come is the better scenario. And what is likely to come, in my opinion, would be some sort of hit to the dollar. So those are my opening thoughts there, Mike. What do you think about that?
I want to basically add a little bit to that as well, because I think you did a great job of setting us up to where we're going to be heading. And so clearly, with all the social unrest, with all the events that's occurring, there's clearly a lot of tension in the air, and that's just on the public side, from what we see from people responding to life's conditions of just things being too expensive, and basically all the financialization of our monetary system benefiting the top 1% or give or take or whoever, and at the expense of everybody else. So we're going to hear more about things on the social side, but yet now I'd like to pay attention to the monetary system chit chatter. And here's an article here that I came across earlier today in regards to what looks like is happening on the EU as they continue to get their weight up in the form of, as it says here, about Germany increasing their gold reserves. This is from Zero Hedge, and it says the end of the fiat currency, or the end of fiat currency in one chart. And it just happens to be some graphics about Germany's operations over the last couple of years, and especially last couple of months or whatnot, and how they have gotten excessively heavy when it comes to liquidating paper, digital assets, and getting physical. And so the very first graph here, as you guys can see, I put it up on the screen here, it shows basically a selling off of reserves throughout the last several years. Ever since the dot-com crisis era, they've been liquidating their gold holdings or not really being concerned with it. And then all of a sudden this year especially, they have increased it. It looks like in September by about 9, I'm not sure if it's 9 tons or, but it says 583 tons is what they've gotten over the last 2 years. So this to me lets me know that what are they getting rid of in order to get physical? And so they're actually selling, or they're liquidating Federal Reserve notes, treasuries, and I'm assuming euros or whatever, to actually purchase and to acquire physical weight. So that plays right into this whole idea of there's something going on, because central banks, governments are moving right now to position themselves heavily in metals. So couldn't be more clear to me as to the systemic nature of events that's occurring right now.
Yeah, and with these more examples that, like what you're bringing up today with Germany, what we're doing is we're getting closer and closer to the core of the financial universe, which we could call like London, the United States, things like that, because we have been talking about, well, it's China and they're stacking mad right now, and it's Russia, or it's Kazakhstan, or it's, it's Hungary or but now it's like, now we're talking about like getting really close to that G7 there that is in on the stacking, just wait until they start increasing their gold reserves in London, it's like, we're never going to be announcing it here, right? That's just how poorly Americans are going to get treated by our own government. We're going to be the very last to increase anything when it comes to gold.
Exactly.
And that's just the sad state of affairs. But yeah, that's just going to show you that things are moving at a faster rate. Yeah. It's interesting because we were talking about hyperinflation yesterday, and people talk about, there's going to be a point where,